You're not making as much money as you wish in the markets because you're focusing on the wrong strategies. You're trying to protect yourself, but in reality what you're doing is you're sabotaging your profits. And many traders are using trading stops thinking that they're minimizing risk. But in reality, that's the problem, guys. A trading stop doesn't protect you from the real threat. It cuts your potential from letting the winners run. Hi guys, it's Anas here, as the majority of you might know me from the day trading program or the supply and demand manual. Today I will be talking about the dangers of trading stops or when not to use them. Alright, think of it this way guys. In trading there are either missed opportunities or real threats. A real threat is when you limit your gains because you're afraid of losing a small amount. For example, you're in a trade and this is a profitable trade. Unfortunately, you start moving your trading stop too early, the price still moves in your favor, but at some point it reverses and hits your trading stop. You get stopped out for a small profits, but then the market continues to soar without you guys. So that's the problem. The trading stop is strangling your potential for bigger gains. Using trading stops at the wrong places can potentially not just hurt your daily or monthly performance, but completely kill your strategy. And this isn't just about managing risk properly, guys. It is about the fact that you're leaving a lot of money on the table. By focusing too much of your attention on the trading stop, you're missing on the big picture. The trend might still have a long way to go when you're booking profits. I see this all the time. When traders are thinking that they're actually limiting the risk or their exposure, what they're doing instead is they're sabotaging their long-term profitability. They're focused not on maximizing their winning trades, but they're focused on minimizing their losses. Imagine this, guys, you're limiting yourself because of a fear. This fear of giving back small profits, it's actually costing you the big profits over the long term. So if you get out of a trade too soon, you're basically limiting your capabilities of making the big money over the long term, because this is just when the trade starts being actually profitable, but you have already cut this trade. Why are you obsessing on chasing trading stops all the time instead of trying to get the full potential of the trend, guys? The market is packed with opportunities, but if you're afraid to let your winners run and you cut your trades, or if you let the market come back to your trading stop and stop you out too soon, if you're doing the wrong things, apparently you're never gonna experience the full potential of your trades. So instead of obsessing on trading stop losses, look at the bigger picture. Look how you can actually maximize your returns instead of trying to trail your stop loss at every 5 minutes. This is something that a lot of traders are doing, and it literally leads to killing your trading performance. And you know what the worst part of the equation is, guys? The worst part here is that big winners can actually turn into small winners. And by trading your stop loss, sometimes you can even miss a big opportunity because you're trading your stop loss too close to the current price. So ask yourself this question: are you protecting yourself from bigger losses, or you're just too afraid to let your winners run? And you might feel convinced today that trading stop losses are the way to go because everyone else is using them out there, but I can guarantee you that if you revisit your trades a few months down the line, you'll be amazed at how many times those trading stops cost you more than they saved. So for instance, if you're journaling, just journal your entries, your exits, and your trading stop losses, how often you have been using those, and a few months later, try to revisit those entries and discover, actually you'll be amazed what you will discover. Think about how frustrating it will be to realize that 90% of those trades could have been far more profitable if you hadn't gotten stopped out too early. And every time you're forcing a trading stop into your strategy, you're forcing it because you're too excited about protecting your profits. And this usually is a mistake, guys. It is almost like falling into the trap of shiny object syndrome. You're getting distracted by a tool that seems like it's gonna help you, but in reality, it is holding you back. And this is something that I have personally struggled myself in my trading journey. So I'm definitely speaking from experience. I would get too focused on trying to avoid every small dip in price rather than embracing the long-term trends that really grow your account. So let's have a look at a couple of trading examples from my day trading room. And as some of you might already know, I have this very handy section which is called record trade returns, which is right here. And here I'm just taking a small fraction of the trades that I've taken that were double-digit returning trades, or trades that have returned over 1 to 10 risk to reward ratio. So let's just choose a few random examples like this trade, for instance. So as you can see, this takes you back to the trading room, and from here you can see the full history of the trade. So if you just look at the last screenshot, this is where I took the trades, and you can see this was my entry at 16,997. So how many times did the price actually try to retest this level? You can't even see the price around this area because we have this risk to reward ratio bar here, but you can see only in the beginning there were like 1, 2, 3, 4 times. So if you decided to move your stop loss under break even and try your stop loss, you would have missed out on a big trade, guys. This trade gave me 1 to 26 risk to reward opportunity. And coming back to the record trade section, let's have a look at another example. So this was 1 to 26. Let's have a look at another trade which gave me 1 to 18 risk to reward ratio trade. So for this particular case, I entered here. So you can see the price faltered for a little while here. So if I move my stop loss too early, I would have been stopped out. At the same time, when the price moved lower, you can see how many times and how long it actually held on this range here. And if I moved my stop loss and trailed it, I would have missed this big jump, and in the end this would have costed me 18 times the risk taken. Even if I was able to book some profits at a 1 to 1 or 1 to 2, this wouldn't have made a big return, guys. And as we already know, this is where we make the majority of our returns. The majority of our returns are made at the exit, not at the entry. So let's have a look at this other trade and see what happened here. Again, very similar scenario, guys. You can see the entry, then the price literally retests a few times the entry. So if I moved my stop loss, I would have been stopped out straight away, and I wouldn't have been able to run this trade, which at the close, it gave me 1 to 25 risk to reward ratio. So again, what I'm trying to say here is that trailing stop losses is a very bad practice. Try to remember this, guys, and embrace it in your own trading. Thank you. Bye.